The following is a presentation of TFNN. It is now time for The Trader's Edge. Now, Steve Rhodes.
Good morning, all you wonderful money masters and treasure hunters. Welcome to the May 8th wonderful Wednesday edition of today's Opening Bell on The Trader's Edge. I'm your host, Steve Rhodes, and I absolutely treasure your presence here today. My outcome, as always, is to help you to become a better money master and to provide you with tools that each of us need in order to lead an inspired life. Because leading an inspired life, folks, truly, that is what it's all about. So let's go look at one of our tools. This is the tool that I call the price of greatness is responsibility. You know, it was Winston Churchill who said that the price of greatness is responsibility. And I think that these words are proven time and time and time again. You know, the climb to greatness, as well as the time one spends up at greatness, at that greatness level, requires taking on large responsibilities and handling these responsibilities with diligence, care, and skill. If part of your life's mission is to accomplish great things, then a must, and I mean a must, is taking care and taking responsibilities of the smaller things that each of us face on a day-in, day-out basis. Let me give you an example. What words would you pass on to a student? Maybe it's a child of yours. Maybe it's a grandchild. I would tell them that if they fail to do their homework or take on extra credit or research or even further the study of whatever it is that they're focused on, that they just simply will not develop fully their ability or knowledge of that subject matter. Look, folks, if these are words that we would pass on to our kids, I think we could pass them on to ourselves as well, because we never stop learning out there. Never stop learning. We're always in school. Part of being here at TFNN is for each of us to be at school. That's you. That's me. I learn more from you. I learn more. I'm motivated by you to go out there and always on each and every day to try to consume more information. Another example of taking care of the small things. If you fail to act caringly and responsibility at home, you'll fail in crucial relationships, whether they be personal or professional. Oftentimes, think about it like this. And each of you out there, you're one man, woman, or armies. One man, woman, armies out there. You know, most traders and investors, you're doing it on your own. And most businesses will fail because of a lack of record keeping. The small things, those are the small things, folks, that add up to be a huge thing. So when it comes to your trading and your investing, the real power is in the details. How about another way that I like to think of this, and that's this. Responsibility walks hand in hand with capacity and power. If you want more capacity, if you want more power, just take on more responsibility. Taking responsibility nurtures that self-confidence within us. It nurtures that self-confidence, and that self-confidence, folks, can help each of us to be more interesting and more attractive individuals. The more you believe in yourself, the more power you will possess to attract good in your life. You know, in New York, we've got the Statue of Liberty. In your heart, I say you should have the Statue of Responsibility. If we are to enjoy freedom, we must act responsible. For the next 2 hours, it's my honor to be responsible for your care and guidance in the markets that we trade and invest in each and every day. So let's get right to it right now. We've got the Dow futures off about 11 points, trading down at 14,972. S&P futures off 2 points, trading at 16.18. NASDAQ futures down 1, trading at 29.45. Russell 2000 off a couple of points. King dollar pulling back a bit, off about 38 ticks right now. We've got the euro on the move. It's up 82 ticks, trading at 1.317. Gold is up $17. Goldilocks trading at 14.66. Silver, hi-ho silver up 7 pennies, trading at 23.88 out there. Light sweet crude up 20 cents out at 95.83. Across the pond over in Asia last night, it was all green out there. The Nikkei up 105 points. The Nikkei is just never going to stop. That is a rocket ship. It's on its way to its own solar system, up 105 points, 0.7%. We had the Hang Seng up 197 points. That was up nearly 0.9% out there. The Shanghai up 0.5%, up 11 points. Over in Asia, over in Europe, I should say right now, flat market here in the FTSE, up 8 points. That's 0.1%. And the DAX is up almost 0.4%, up 31 points. Our call-in number, 877-927-6648. Give us a call. We can take a look at your stock, your equity, your commodity, whatever it is that you'd like. Would love to hear from you. Let's start off by taking a look here at the ES Mini. If you are listening on the radio or your mobile device at tfnn.mobi, thank you so much for doing that. Remember the archive of this show. It's on Channel 9. You can always get the live stream of the show as well. Just go to the homepage of tfnn.com. On that right-hand side, you will see that button. Click on it. Button with 3 little smartphones. This show will stream live. You'll be able to take a look at these charts. If you'd like to see it in HD, go to the homepage of tfnn.com. Sign up for the Tiger's Den. You can test drive that for 30 days. You'll see all these charts here in HD. Yesterday, we were pointing out the sideways consolidation range. Sideways consolidation range that really began at about 10 o'clock in the morning as the market was moving up off of that, what was to be considered a great jobs number out there. Of course, I think that will later be, we'll later take a dive into the details. I don't know that anybody really took a look at the details. Does it matter in this case here? Right now, your responsibility as a market technician is to see how the market responds to any data out there. And in this case here, we saw a move up, and then we saw a sideways consolidation move. That sideways consolidation move taking place all the way from 10 a.m. on Friday morning, and then finally truly breaking out of it right about 9:30 as we were coming on the air. One little push higher up into the 10 o'clock time frame, a little push lower. Now, it doesn't really matter. It was breaking that consolidation range, the top of it, which was right around the 16, 15 and a quarter level. Once you broke up, I'd say about 16, that was giving you the signal it wanted to go ahead and move higher. We know that it was an 8-point consolidation range from the highs of about 16, 15 and a quarter down to the lows of about 16.07 and a quarter. There's your 8 points there. When you break a consolidation range, whether it be to the top or to the bottom, you're going to go ahead and make a move at least equal to the move of that consolidation. Doesn't matter which way it's going to go. In this case here, what we do know, a high percentage of the time, consolidations are going to break in the direction that they came from. That's exactly what we had take place in the ES Mini. We mentioned that during yesterday morning's show. We gave you a price projection of 1623, 1624. That was the upside projection. I didn't give you the downside projection, but that would have been 1599. What did the ES Mini actually do? Well, if you take a look at the high coming in at 3:30 in the 3:30 in the afternoon yesterday, got up to 1621.75. Got up to 1621.75 at 4:30. A little bit at 7 o'clock this morning, got up to 1622. You got to like that. To me, that completes the pattern, whether it was 1623 or 1622 out there. Got a little bit of a reversal signal coming in about 4:30 yesterday. Some additional follow-through at 6:30 last night. What we've seen here is now a little bit more of a sideways consolidation move out here. Does look to me like the ES Mini wants to trade a bit lower. If we take a look at that relative strength indicator right now, only at about a 42 level out here, so it's got a little bit more room to push lower. But I don't think that the move to the upside here is completely done, not at the moment. What's the important chart for us to be taking a look at here this morning? Well, if we were to take a look at all of the 30-minute charts yesterday, each of them had a sideways consolidation move. The Dow, I mentioned, I think ended up being about a 72-point consolidation move. That price projection was 15,025. The Dow actually yesterday got up to a high of 15,000 in the futures contract is what I'm talking about here right now. Got up to about 6:30 this morning. It was 7 o'clock this morning, also trading at that 14,999, 15,000 level. Could be another 25 points left in that. If we take a look at the Dow futures here, I'm not sure what pushed it a little bit lower this morning. Might have been McDonald's out there. I think their same-store sales are off about 8%. But the Dow futures here have a little bit further to push back. And to complete their consolidation pattern, quite frankly, they have just a bit higher to push into it. In fact, if we go back and we actually take a look at the ES Mini out here, let me see here. Where is that? No, let's take a look at the Russell 2000. Here's the Russell 2000 sideways consolidation move. It, too, had an 8-point move to the upside. We can see that the Russell 2000 on the futures contract on the 30, actually running into the top of that resistance area of that rising price channel as it was completing its consolidation move to the upside out there. The real wild card here is that we've got 3 of the 4 futures contracts, 3 of the 4 30-minute contracts that actually completed their patterns. The one that didn't is actually the one that has had the strength as of late out here, and that was the NQ, the NASDAQ futures, have not broken the consolidation range. Which way is this market going to go? I don't know the answer to that. What I do know is by watching this trading pattern here inside the NQ, because it has extended its sideways consolidation move, it's going to be coming from here where you're going to get your next signal. 877-927-6648 in the pre-markets here because of earnings. Let's see. Popping to the upside. Whole Foods up 8%. To the downside, looks like Semantic Corp down about 6%. We'll be right back, folks.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or TigerTV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. With the launch of TigerTV, TFNN has brought our programming to the next level. With TigerTV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on TigerTV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out TigerTV, then visit TFNN.com and see what you're missing.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Let's take a look at some of these stocks here moving in the pre-market. Leading to the downside dollar-wise is Value Click. VCLK is the ticker symbol. They closed at 31.74 last night. Reported revenues of $26.2 million versus 21.57. So one of the few out there beating numbers to the upside. To the net income as well, $32.7 million versus 29.85. Must be off on guidance here. Value Click, VCLK, closed at 31.74. Last trade firing off at 25.49. Let's go take a look at the stock chart. Not a bad-looking stock chart out here. Had a nice breakaway gap here on February the 14th with volume. So you have wide price spread, accelerated volume. Make sure you always fill in that gap here, at least in your mind when you take a look at that candle. Very powerful candle, very powerful gap out there. That was February 14th, 5.2 million shares. Has some additional foul. It gets into the very overbought territory. Has an additional follow-through day here on the 18th of March. Another 3.5 million shares to the upside. So pretty decent out there. Now, it's trading right now at 25.49. 25.49 is going to take you, in essence, right into that candle from February 14th. That low is 24.08 out there. So we'll see if that area is going to hold. This is going to be the first test here on Value Click. We'll go ahead. We'll watch this as it opens or during the next couple of hours. We'll put a red line across the screen. We'll see if this has volume off of its highs out here. It does have a big high-volume downdraft area that came back in May 3rd of 2012 out there. Made a little bit lower low before it actually then went ahead and moved off of the bottom out here. That was a nice move because you did have your first sign of strength, and that was in Value Click. That was on June 29th, 2012. You had another little sign of strength out here. I would say this sign of strength, came in on August the 3rd out here, so really consolidated for a while down at the bottom and was able to take on. So this is kind of interesting. Here's an equity that was taking on that breakdown level. That breakdown had 8.2 million shares, and as it got into that area, it actually had a little upthrust here with volume of only 883,000 shares out there. So it still broke through it. If we pull this back a bit here, you can see even that nice move up off of the, as it broke really through that area, that first sign of strength that it's going to come back at, not first sign of strength, but the sign of strength here from February 14th that it's going to test here right now at the 2408-ish level. Still volume there, not anywhere near what we saw as volume came out of the thing back in May of 2012. So real support on this would also be back at about that high, 1749. That first will have to break this breakout. Well, it's just the breakout that I'm referring to now as February the 15th area. So we'll just have to see the volume as it comes out of Value Click this morning. Now to the upside, let's take a look at what's going on to the upside. You've got ticker symbol CTSH, Cognizant Technology. They closed at 64.88. They are the leader in the clubhouse dollar-wise right now to the upside. They are trading at 67.80. They produced revenues here of, well, I tell you, if there we go, net revenue of $2.02 billion versus 1.7. So they beat their top line. Also beat their bottom line, net income $284 million versus $243. As I said, less trade firing off at 67.90. Now this stock chart here, this came back into an area where it had broken down and tested it on lighter volume. Let's take a look at this. So this is coming back into an area right here back in May. So a year ago they report. I'm assuming they were reporting reporting earnings since today is May 8th. May 7th, exactly a year ago, had 38 million shares to the downside. So talk about a cycle completed. Comes back down here and tests that area back in the end of April 25th. 9 million shares, was testing that high volume low of 38 million shares. We saw it tested on the following session on the 26th with even lighter volume, 6.4 million shares. That is now an area of strong support on this equity. Nothing really large to the upside here. In fact, if anything, you saw a little bit of a down thrust here April 24th with 15 million shares. Still not to the downside, still not able to bust into that May 7, 2012, 38 million area. So that is a level of support. It's going to gap up this morning, trading at 67.92. 67.92 here. That would give you, if you got volume, that'll give you a small A to B equals CD up. The A to B equals CD up on this would be, I need to redraw this tool here. What the heck happened there? I'm going to do this real quickly before we go to break. Your A to B equals CD price projection on Cognizant Technologies. Well, the 1-to-1 is 69.63. No reason it can't get up to 73.02 out there. 877-927-6648. We'll be right back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Tom O'Brien's daily newsletter, Market Insights, gives you Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. With Market Insights, nothing is left to guessing. With the market at record levels, volatility is here, and now is a perfect time to take advantage of a 2-week free trial to Tom O'Brien's daily newsletter, Market Insights. As recently as March 26th, Tom advised his subscribers to liquidate their 4 short-term equity holdings, closing out all 4 positions for a combined 15.9% profit. And on April 1st, Tom advised his clients to sell their longer-term position in AIG warrants, locking in more than a 40% profit in just that one trade. If you'd like to see the kind of newsletter Tom O'Brien sends out to his subscribers each morning, then sign up for your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. TFNN is excited to launch our brand new software charting program, The Art of the Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind software, Art of the Charts allows you to scan for Fibonacci formation setups, including Gartley's, butterflies, ABCs, and much more. Art of the Charts is designed to help you when scouring the market for stocks just beginning to form the trading patterns that many investors spend days, weeks, and even months searching to find. As part of our introductory pricing, we're offering licenses available at only $59 per month. We're so confident that you'll love this new outstanding piece of charting software that we'll even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Lock in your low price today by ordering your copy at TFNN.com. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
To the races. We got the Dow off 28 points right now, trading out at 15,028. S&P down 3, trading at 1623. Composite off 5 points, trading at 33.91. Russell 2000 off 2.5 points, trading at 965. Google down 30 cents. Apple off 240. Microsoft back a bit here this morning, off 45 cents. That's about 1 3/10 here in the early stages of the market. Intel off 0.5% down, 12 ticks. Cisco up 13. Lead the charge to the upside. Whole paycheck market. Whole Foods out there up $8.20. That's up 8%. McKesson Corp, the distributor to a lot of the mom and pop and other drugstores out there. McKesson Corp up 6%. That's up about 5%, up $6. Pioneer Southwest PSE up 19% this morning. That's up $5. WebMD up $4.50. That's up 17%. DaVita Healthcare DVA. Warren Buffett taking a stake in that. That's up 3.13%. That's up about $4. The fresh market also benefiting, I suppose. I don't know if they were out with numbers. They may have been out with numbers as well. TFM is the ticker symbol. Looks like they're just benefiting. They're just drafting Whole Foods, the market out there. Both really great stores with great product selections. You got the fresh market up about 6%, $2.50. The software company, gaming software company, Electronic Arts up $2.40. That's up 13%. Alexa Pharmaceuticals, ALXA, up 44% here this morning. They're having a nice pop. Onyx Pharmaceuticals up 2.5%. It's up $2 and change out there. The pharma area, that's the place to be looking. To the downside, you've got Axial Corp. That's off 10%. AX Double L out there. That is down $5 and change. Value Click, we covered that. Jazz Pharmaceuticals. Now, Jazz has been a strong one out there. We'll take a look at that stock chart. And if I don't, just remind me, just punch in the den or somewhere. Jazz Pharmaceuticals, we want to look at that. That's down 7% this morning, off 450. Zillow, Z is a ticker symbol. They are down, not to be confused with Z in the den. Zillow, though, is off 7% this morning, down $4 and change. Fusion IO, FIO, off about 21% this morning. Yikes, that is getting a little bit of a haircut. AOL, down 8% off 340. SodaStream off $1.60. Cobalt International CIE off 7%. Our call number 877-927-6648. I had a request to take a look at a stock I mentioned yesterday. It had gapped down. It is VSI is the ticker symbol. That is, let's see, come on, what is that again, that VSI? Vitamin Shop, that's right. I knew it all the time. Vitamin Shop, they were out with earnings yesterday. They go ahead, they gap down. Now, this stock chart here, even though it is down towards the bottom of that relative weakness indicator out here, and even though it has come back into a breakout area, this equity here broke out on the trading session here of May 9th, 2012. Now, here's a breakout that you don't want to buy. And let's go take a look at the reasons why. You do want to take a look at stocks coming back to a breakout area. You just you note them on your chart. You be patient. I mean patient. Be diligent. Just wait for a stock to come back to that breakout area. Come back on. lighter volume. You don't want to come back the way that this has come back here, because this could be setting up a much larger A to B equals CD down. Now, it should have some support. We'll find out if it has support here because of that breakout. But if we take a look at the volume, you can see, talk about volume off of the highs. Well, here's a great example. So if you're listening in on the radio, you're not sure what volume off of the highs actually is, what we refer to, go take a look at this equity. This equity up here makes a higher high, less relative strength, does it on February 19th, gets up to 65.93 out there, does it on 556,000 shares. You start to see the bearish reversal signs. You saw that here on February 20th. We had some additional follow-through on the 25th, and if that wasn't bearish enough for you, I would have to say volume off of the top would be. That was your February 26th level as it gaps down with 4.2 million shares. That was a sign to get out of Dodge if you were in this equity and you had taken, a nice run up. This was an IPO going back into the 2009 time frame, October 2009. Really a nice straight shot on the way up out here. And now you've got institutions that are selling it. And that was your real first sign of institutional selling inside this equity. That was a huge one. Goes ahead, makes a little bit lower low, does that through April the 8th, 2013. Gets down with about 500,000 shares. Yeah, about 600,000 shares on April the 5th out here. Moves up a tad, but it's moving up into an area of turbulence that downdraft day from February 26th. What does it do yesterday? Gaps down, so you got a gap down coming into an area, a breakout area. That's not what you want to see. You never want to see that. Gaps down yesterday with another couple million shares out there, and that 2 million shares was actually taking out the swing point low from April 5th. That could be your larger A to B equals CD down. That would be confirmed inside this equity. So I'm assuming that the reason to take a look at it is this a buy? Well, no, this is not a buy. Now you'd have to see some real signs of strength and then wait for this equity to come back to it. Why? Well, all you're going to really get out of this equity, even if you did try to get it to the long side, it would have to be the high of yesterday is going to be your first area of resistance, 47.50. Your next area of resistance, if it can get into that gap, is going to be the low of the prior session, May 6th. That's at 48.85. And even if this had enough strength, it's going to really run into resistance now at the low of February 26th out here at 50.30. If you were in this equity and you were still holding it from the top, what are you going to do as this thing comes down to that 56.80 level? If you're even any kind of a technician or taking a look at volumes out here, you're going to sell, Mortimer, sell. The A to B equals CD on this on the daily. 1-to-1 would take it to 32.97. However, it looks to me like this would actually want to run more down to about the 27.50 level. Let's go take a look at this on the weekly chart. Let's take a look. Is the weekly chart telling us anything different? Absolutely not. In fact, take a look at that evening star, bearish engulfing candle formation on March the 1st out there. Massive volume to the downside on the weekly. Already on the weekly, you've taken out your B point of the A to B equals CD down. If we take a look at that same A to B equals CD down pattern, you've got it's now confirmed on the weekly, 32.94. Where's that going to take you? Really back. This thing really, well, it could take you all the way back down to the lows, quite frankly. The first signs of strength out here that you really saw inside this equity on a weekly take you back into the December 2010 time frame. That's where your 1-to-1 A to B equals CD. So 32.95 is what the Vitamin Shop has written all over it as we speak here right now. Let's go take a look at some of these other stocks here popping and dropping. Let's take a look at Whole Foods Market, WFM out there. One of my favorite stores to go to. You know why? Because I can get a nice double shot of wheatgrass out there. One of my favorite vitamins to, forget the Vitamin Shop, folks. Go get a shot of wheatgrass. Now, let me give you the trick. Okay, because I'm not the type of guy that likes to go out and mow the lawn and then eat it. So you can say, wheatgrass, are you kidding me, Steve Rhodes? No, I'm not kidding you. Wheatgrass has about like 98% of all the minerals that you could ever want, and especially if it's coming from the right soil out there, it's better than taking any vitamin out there live. I've been taking wheatgrass shots for, 10 years, at least 10 years out here. Now, here's the way to do it. You got to disguise it. I've got two different disguise techniques when doing that shot of wheatgrass. I say, mine, forget that double latte stuff out there. Nothing against Starbucks, but go get a wheatgrass, then go do your double latte or whatever that is. Here's the deal. Do a double shot of wheatgrass and have them put in a single shot of ginger. You put those two on there. You want to talk about getting some energy and some fire. It'll totally disguise the taste, nasty taste, I should say, of that wheatgrass out there. Some people like it. That I can't get into. And the other thing you can do, especially if you go over to Whole Foods Market, usually they have those little machines out there where you can make fresh peanut butter, fresh almond butter, whatever kind of butter it is that you want. Go to the counter where they sell the meats or even the wheatgrass place. Ask them for one of those small little white cups or maybe a small little plastic cup, and go over to that peanut butter machine. Just turn it on, take a little dab. That will wipe away any aftertaste that you've got, and you will get all of the vitamins, nutrients that your body could possibly want to consume out here. In any event, we're taking a look at Whole Foods Market. This thing is gapping up, major gap up. You talk about wide price spread. This has it in it. Right now, trading out at 100.79. Volume behind the move so far in the first 14 minutes of trading, 1.7 million shares. That's taking on a swing point. Looks like this has been consolidating for a bit. The swing point it's taking on is the October 5th high. That only has 1.4 million shares, so it should have the volume to jettison that level. Whole Foods Market had a big downdraft day here, and that was on February the 14th, on Valentine's Day. They must have had some problems out there. 14 million shares of the downside, but looks like volume-wise today should be able to take that out. Now let's pull this back a little bit further here. And actually, this is up towards its all-time highs. Let me put this back on a weekly chart and just make sure. Yeah, absolutely. So where is this little puppy going? Well, let's just take a look at expansions now. Let's take a look at expansions because that's what it's doing of major swing points out here. That would be your December 30, 2005 swing point high, 79.90, all the way down to the low put in back in 2008, November 21st, 2008. The 99.72, that's where it's already traded to. That's your 1 to 1.272 expansion. So that says you take out the swing point high of 101.86, and on the daily chart it should have the volume. Looks like on the weekly as well out here. Its next move from an expansion standpoint should take you up into about $125. That is on Whole Foods Market. That's at least what the weekly chart looks like out there. So not a bad-looking stock chart at all. Let's take a look at some of these other equities here, popping and dropping in the market here. We've got DaVita. Let's go take a look at DaVita Healthcare. DVA is the ticker symbol. I know Mr. Buffett has announced that he's taking a larger share in DaVita. Got wide price spread behind this move, so you got a lot of folks here trying to draft Warren, Mr. Buy and Hold. In fact, we're going to go take a look at Berkshire Hathaway. We're going to take a look at what that buy and hold would have actually gotten folks that were inside that equity. DaVita here right now it's coming into the swing point here. This had a sign of strength, so this sign of strength was right here on April the 2nd. It came back to test that level. That's what it had done recently. Let me go ahead and get rid of the longer term A to B equals CD on this chart here. And let's go take a look at what it has done here on the shorter term. Here's where you want to take a look at buying a breakout. This thing here, breaking out. Put the lines across the screen. Well, that was not a good line. Let's try that again here. There we go. If you take a look at this equity, its most recent breakout came on April 2nd, and it breaks out with 2.1 million shares. As it comes back into that level, 828,000. Let's put the line across the bottom of the chart as well. You remember, we're going to use the day that it had broken out. Give me a moment here. So it breaks out, comes back on a lighter volume, then the breakout, with the exception of this day right here. Somebody was loading up by, maybe it was Mr. Buffett taking on the rest of his position, had 3 million shares on May the 3rd out there. Now it's got enough volume to take out its highs. So far, 461,000 shares. That high, and it's only 17 minutes of trading, that high has got 2.1 million shares. So it's going to have the volume today to certainly take that out and go up and away, and that is on DaVita. It is not in the overbought territory zone here just yet. Now, Mr. Buy and Hold, you know, what I dislike is people doing the detailed work out here. So let's pull up Berkshire Hathaway, because I'll tell you that buy and hold is not the right strategy out here. Test after test after test shows you there are times to be in the market and there are times to be out of the market. So What did Mr. Buffett have to say to those folks who went ahead and bought in at his highs back in December of 2007 when share prices were $151,650? What did he have to say to those folks about buy and hold as it was making a low at $70,000 back in March of 2009? How would you have felt about buy and hold back then? Why didn't anybody at CNBC or any place else ask those kind of questions? All that Berkshire Hathaway has done since that time period, it's making an expansion out here. But folks, buy and hold, they talk about buy and hold as, hey, if you buy now, 40 years from now, it's going to prove to be a good thing. You know what? Most people that are investing or trading in the marketplace, they're not looking 40 years out from now. So, yeah, maybe your kids, that's a great strategy. They're just coming out of college or just getting a job. They're in their 20s. Maybe early 30s out there. Okay, those folks, sure, they can go ahead and maybe do a buy and hold. But the reality is the majority of the folks that are listening on this show or the majority of folks listening on CNBC, let me tell you what even, the Oracle's buy and hold would have done for you. You just look at it on the chart here. That is a haircut out there, and haircuts happen, more often than not. Let's go to Dan in Miami. Dan, thanks for calling. Thanks for holding. How you doing this morning?
Hey, Steve, how you doing? A great show.
Thank you. You wanted to take a look at a couple of different stock charts out here, GE and the TBT, I believe?
I'm kind of more of a long-term guy, daily, weekly. Yeah, I don't own GE yet. I had it. I got stopped on it. And basically, I own TBT. What do you think?
Okay. All righty. When we come back, we're going to go to Dan down in Miami, Florida. Gotta love Miami. What a great city. You talk about electricity. That city's got it all. 877-927-6648. We'll be right back to you, Dan.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page at TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, the Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Welcome back, folks. Dow's off 17 points right now, and do yourself a favor tonight. A excellent free workshop. I mean, the cost of not going to the workshop, it's a cost of losing out on great information. The Art of the Charts, hosted by David White and Tom O'Brien, a great piece of software. I use it all the time. The Art of the Charts. It's a workshop tonight from 6:30 to 7:30. They're running a special on the software. It's $59 a month, or you can save 35%, $520 a year. Plus, we've got the Tiger Dollar promotion running out there, a 20% bonus for any purchase above $500 or more out there, and in addition, 10%, up to 10% donated to the One Fund out there to help those folks in Boston. Let's go back down to Miami. We're speaking with Dan. We're taking a look at the TBT. We'll start off with the TBT, which is the ETF to short the bonds out here. Now, you're a longer-term trader, Dan, so did you enter the TBT a while ago? Tell me where you're at with it, because that would help me better understand what you're looking at.
61.5 long.
61.5 long. So we're taking a look at the TBT. It's at 61.98 right now. So on the TBT, you know, the real key here is I believe that the TBT is the 20-year Treasury versus the 20-year note versus the 30-year, but we're going to pay attention to the 30-year bond out here. And what you need to see right now, this 30-year Treasury, what it has done, if you're watching on Tiger TV, it has had one heck of an A to B leg. And that A leg was off of the lows of this consolidation level. That was back on March 8th. The high was as it broke the consolidation. It did what it was supposed to do, made that initial price objective, which was in the 149 level. Now, what's on your side is this big, huge bearish engulfing candle that you had here on Friday out there. But what's happening, we're seeing the bodies get smaller, we're seeing volume lighten up, and all that it's really done is made a 0.382 retracement. If that's all this does, you don't want to be in TBT, because this could be making a very large A to B equals CD up. That would take bonds into the 155 level. So do make sure that you keep a stop in place on TBT. As far as where that stop ought to be, the stop ought to be probably below where you purchased. Probably ought to be below the swing point low of May 1st out there, which is right around 58.23. On the TBT, you can't really pay attention to any of these gaps or anything that are out here, because the underlying instrument is the actual bond futures contract. So be careful on that. In what you should see, what should occur here, now that the TBT has done that initial retracement, is we should see now and that initial retracement coming back to the 0.382 level. What you could see, Dan, here is just an intraday or daily move up back into about maybe the 148 range. So that will put a little pressure on your TBT trade unless everything happens in the off hours out there. So that's on TBT. On the longer term, I think it makes sense on a longer term trade, but right now it looks like bonds actually want higher price out here over that longer-term period out there. And that's really because of the strength behind that A to B move inside bonds. If we go take a look at the General out here, take a look at the General Electric, you say you were in that trade and got stopped out. Now, what the General Electric did, it had formed a 1.272 butterfly, and that's what's really going to be taught tonight during the workshop that David and Tom are holding. And what this I just moved that. I didn't mean to do that. I meant to grab my retracement tool. And what this actually did was what it was supposed to do, which was make a 0.618 retracement. That is a normal move inside General Electric. But I wouldn't get back into this. If you're looking to get back into it, wait until this comes all the way down and tests that April 22nd level of $21.11 and make sure it does it on less than 87 million shares out there. All right, Dan?
I got stopped out on earnings there about 2 weeks ago. So
yeah, I had that big down thrust. So you got big volume to the downside. Let it test that low of April 22nd before you go back in. All right, folks, that's it for the show. Stay tuned for the next for the next hour. So I'll be back, or I'll see you in the morning. Take care.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.